Jim Rogers, also nice to have you back. Makes sense for the madness which is happening in the world.
Well, it's not your fault, I don't think. It is interesting that your market is calm today compared to what's going on in the rest of the world. It may mean that the rally is coming. We've had a huge drop, as you know, worldwide, and that often leads to a rally. I have no idea.
Jim, the fact that cryptocurrencies have melted, there is a fear that interest rates will move higher and that will slow down the economy more. What kind of narrative do you think is at play here? One side is fear, second side is a genuine fear of compulsion of unwinding.
World stock markets have been going up for 12 or 13 years. That's the longest in American history anyway. So we're certainly overdue for a problem. We don't have to have one, but we do. But inflation is coming back. Stocks in many countries were extremely high. Bubbles were developing in many countries. Interest rates had to go up. I mean, we're overdue for a bear market. I'm not trying to scare people or something, but we've always had bear markets throughout history, and we will have them again, and we're getting very close. I see a lot of pessimism in the world right now. That could lead to a rally if some good news comes, but we're going to have a bear market again, and it's coming soon, and it's going to be very, very bad.
Because there is a long list of what has gone wrong, what will go wrong. My question is that why should one not sell, and why should one not panic right now?
Actually, you asked, I think very simple, that right now we are seeing worries to be all around, fear all around, panic all around. And to a great extent, things are, there's a merit in all of this. But things which are relevant for US, may not be relevant for India. In a shorter term, yes, of course, markets drive sentiments across the globe, and you will see increased implications happening even in Indian economics, in the markets specifically, in a shorter term. But if you look at, US is sitting on 8% high inflation, their usual inflation is 0%. India is on 6-7% inflation, our usual inflation is 4-5%, right? Our US interest rate, in US housing rates are around 5.5%. In India, we are at 7%, right? Historically, today US is sitting on all-time high balance sheet. In India, our leverage is hardly anything, whether it is a company level, country level, or government level. So I think the dynamics of both markets are very, very different. Of course, when US is harbinger of everything, when something happens in US, it has implications all over the world, and that is what we are sort of feeling at this.
Saurabh, there was a time when your thought process was getting rewarded by the market. Whether it was identify good companies with good cash flow, or it was identifying companies which had a business moat around them. That same thought process right now is not working. High PE stocks are getting punished, and markets have a complete disregard for great franchises. How are you dealing with this cycle within a cycle?
Look, I don't think the correction in India or globally has that much to do with high PE. I know there's this perpetual perception that high PE gets punished, but it honestly doesn't show up either in the data. So whether it is Indian power and infrastructure stocks, or Indian consumer stocks, or Indian banking stocks, or indeed even in America, bellwether names like Microsoft or Walmart, it's a global pullback, and that itself gives us the clue as to why, at one level, yes, we should worry about it, but at another level, we should buy as much as we can in these circumstances, because the pullback that's happening in our market has very little to do with fundamentals. Our economy's outlook is the best I have seen in 12, 13 years. The banking system, for example, is in its best shape, I think, for 20, 25 years. So the pullback in India has got very little to do with fundamentals. The pullback in India has got everything to do with the fact that a lot of American investors have huge compulsions bearing down upon them. Their private portfolios, the unlisted portfolios, have been decimated in the last 6 months. In their public market portfolios, they're down 30%. And perforce, compulsion From a compulsive perspective, they have to reduce their emerging market holdings, and we are part of that sell down process. Since the sell down is not taking that much regard of fundamentals, our job as sensible investors is to just keep a rational mind and keep buying the same stocks that you were referencing. High quality, high cash generative, great franchises. They are available even cheaper now than they were available 2 months ago, and we are buying as much as we can. And we're extremely thankful to the clients out there. They continue to give us inflows even in these circumstances, and we're taking full advantage of that to buy every day.